President Trump's former top economic advisor, Gary Cohn, making a very big bet on blockchain. Let's get to Seema Mody live at the Credit Suisse Blockchain and Digital Asset Symposium in New York City with more. Seema.
Hi, Melissa. Thank you. And yes, joined by Gary Cohn, as well as Hector Hoyos, the CEO of Hoyos Integrity, a company that's trying to marry cybersecurity and blockchain, a company that, Gary, you are invested in. So let's start there. Following your high-profile departure from the White House, I'm sure there are a number of companies that wanted you as an advisor and an investor. Why Hoyos?
Well, I think we should have Hector talk about the phone and what we've been able to do. But I'll start with saying this. You know, when I was in the private sector, we always worried about secure data, secure communications, and securing our clients' data. When I went to the public sector, it's the same issue. We had to deal with secure data, secure communications. What I found out is that the public sector didn't have a better solution than the private sector. When I left the White House, one of the challenges that I set out to see if I could be part of the solution was in finding a solution for secure data, secure telephony, and secure communication. I just happened to luckily find Hector, who was working on the problem, and Hector has created a secure phone, and we've been working on that for the last 2 years.
Hector, there has been renewed concern about cybersecurity hacks as well as data privacy. Your goal is to create the world's most smartest and secure phone. Seems like a great idea at a time when we're really concerned about security, but how exactly are you doing it?
So many companies attempted to do that in the last few years, and the problem was that the operating system they were using wasn't secure. Android is not secure. The iOS operating system is not secure. So what we did is we took the operating system from a company in California called Green Hill Software that for 20 years has been the operating system running the nuclear bomber wing of the United States, the B-1, the B-2, B-52, the F-35s, all of our nuclear missile and guidance, all of our nuclear systems run on Integrity. So we took the Integrity operating system, put it inside a brand new phone that we designed from most of the folks that used to work for Motorola Mobility that work for us now. And now that means that with this phone, if you have a phone and I have a phone and you call me, that call automatically is secure. There is nobody can intercept that call or the text or the email. Now, if I have an iPhone and you call me with this phone, you can still make that call, but that call will not be secure. Now, Integrity in 20 years of being in operation has never had a single hack of vulnerability because that's how our nuclear weapons arsenal has been protected, and that is the type of capability that we have created and brought to market.
Gary, you mentioned this at the top, but what was it about your experience in the White House that sparked your interest in blockchain and security? And are you going to pitch this phone to President Trump?
Well, look, I've been involved with security and secure data my whole life, and making sure you understand what you have it, who you're protecting it from. Whether you're involved with a merger transaction, you've got material non-public data, who gets to see it in the organization, who doesn't. You move to the White House, you've got a whole different level of security concerns. So it was one of these areas where I always thought there was a better solution, and when I got to the government, there really wasn't a better solution, and I saw what we had to do. We went to foreign countries with phones, the way we had to change phones out, and what the security administrations did with the phones, and how they couldn't make them any more secure than the private sector could. So I said to myself, there has to be a better solution for this long time, and that's how I ended up getting involved with Hector. You know, and then the unique part about it is we also found out that inside our secure environment, we have a wallet, which we really weren't planning on developing a wallet, but we ended up with a very secure wallet, secure enough that Hector and his team were able to secure $1 million of insurance per wallet per user. Which is pretty impressive if you think about that.
Yeah, certainly a growing area, digital payments. Let me send it back to Melissa Lee in studio.
Yeah, Gary, hey, great to have you on the show. I have a question for you. I mean, you've been out of the White House for some time, so you've been unfettered, so to speak. So I wanted to ask you about the tax cuts and what you make of the success of the tax cuts and whether or not you think they were, in fact, successful. FedEx got some blowback in the New York Times for saving a lot of money because of the corporate tax rate going down. They paid zero taxes, according to the New York Times, but didn't spend it on capital expenditures. How would you measure the success of the corporate tax cuts?
So, Melissa, let me leave FedEx and the New York Times and everyone out of this discussion and talks about the tax cuts in its entirety. So if you look at tax collections, 2015, 2016, 2017, 2018, believe it or not, overall tax receipts went up each of those years. Each of those years, we had higher and higher tax receipts. Yes, corporate tax collection went down by a small bit of overall revenue, but personal income tax went up. That's exactly what we would have modeled. We would have modeled that corporate taxes would have went down with the rate going down substantially, and that personal income tax would have gone up because we modeled there to be growth in the economy, and we saw that. We saw that by the unemployment rate coming down, and we saw that by wage growth. So exactly what we thought was going to happen when we projected the tax cuts is happening, and we see that. And so I'm very pleased with what's happening with the tax cuts right now and what they're doing for the economy. Look, that is all happening in spite of the fact that we have tariffs on steel and aluminum and the other major inputs that you would need if you were going to go out and do a big capex expansion, and the fact that our trade is down substantially with China. Those two things really do impact the amount of capital expenditure you have. And then put on top of that, the newest ingredient is what is the geopolitical climate going to look like going forward? There are some candidates right now that are running with an agenda with an awful lot of government reform in the corporate world. And if you were thinking of doing a 10, 20, 30, $40 billion capex expansion in the United States right now, I'm not sure you would be acting as a good fiduciary as a board member to want to go do that capital expansion right now until you understood what the cost of that was going to be in terms of employees, in terms of healthcare costs, in terms of profitability costs, in terms of surtax costs, in terms of understanding all of the different plans and what may come into legislation or what won't come into legislation.
On that political note, Gary, we've had a lot of major investors make predictions as to how much the market would go down under Elizabeth Warren or Bernie Sanders. Care to venture a guess? I mean, Paul Tudor Jones is in there, Lee Cooperman in there, down 20%, down 25%. What do you think?
Look, it's not my job. I'm not an equity strategist. I don't run equity money for a living. It's not what I do for a living. Right now, I'm spending my time on figuring out how to solve the hackability of digital communications, and that's a lot more fun.
Well, that's a good answer, Gary. But in terms of running a business and seeing what the business environment might be, more conducive to business under a Warren or Bernie Sanders presidency or another Trump presidency?
Well, you know the answer. The Trump presidency is obviously more conducive to business. You know, under the Trump presidency, and you've heard me talk about this, we've made the U.S. much more competitive on a corporate tax standpoint. You know, our tax rate is still very competitive. We're not the lowest in the world. In fact, India just cut their corporate tax rate to 15%. You look at what we've done in the regulatory standards in the United States, we've made our regulations smart. We haven't just deregulated to say we've deregulated. We've deregulated to make ourselves competitive and smart. We're still a highly regulated environment here in the United States, and the business community is thriving because of that. And you see that in the jobs data, in the jobs number, in the unemployment report. We see wage growth over 3%. We see unemployment around, 50-year lows. Those are good numbers. Those are telling you that corporate America is investing in the U.S. economy.
But some will argue that the tariffs and the uncertainty of the tariffs are basically undoing all of that good that President Trump has done for businesses. Would you agree with that?
You know that I'm not in favor of tariffs. I understand, and I think most of you understand, that our economy is 80% service driven. That's both on the GDP side as well as the job side. So to the extent that we can make imports more affordable or cheaper in the United States, it means that U.S. consumers will have more money to spend on domestically produced services, and that's good for our economy. So I'm not in favor of tariffs. I believe that the tariffs are hurting the corporate environment, and they are hurting disposable income. And as you know and I know, disposable income has been what's driving the U.S. economy.
Gary, you read people as well as anybody I've ever met. You were next to the president for quite some time. In your opinion, President Trump moved the tariffs from August until December 15th. If there's no deal, will he blink, or do you think he will go through with the tariffs on the 15th of December?
Hey, Guy. Look, I think if there's no deal, he'll go through with them on December 15th. I think he's given himself time. He's got him through the other side of the holiday season. And December 15th is a long time from now in terms of tariff negotiations. There's a lot of other things that have to happen in the United States, including debt ceiling, continuing resolution. I think that he thinks that that's a forcing function, and if he keeps blinking, he loses credibility in the Chinese eyes.
All right, Gary.
Do you think he'll go forward, though, with a phase one deal? Oh, go ahead,
Go
Melissa.
ahead, Seema. Go ahead.
Oh, I was just going to follow up there. Do you think that the president will follow through with a phase one deal that satisfies the Chinese but doesn't really address some of the core issues with the Chinese practices like IP theft?
Look, I hope the president follows through with the phase one deal. It's important for our farmers. Our farmers deserve to be growing crops. Our farmers deserve to be exporting. It's important for our U.S. economy. We should not be in this position right now. A phase one deal is important to our U.S. economy. So at a minimum, we should go through with that.
We'll see if we get there. Gary Cohn and Hector Hoyos, thank you for joining us today.
Thank
Melissa,
you.
Thank you.
I'll send it back to you in studio.
All right, thanks, Seema. Thanks, Gary and Victor. And don't forget another big interview with Goldman Sachs Senior Chairman Lloyd Blankfein on Halftime Report tomorrow at 12 p.m. Eastern Time. What do you make of Mr. Cohn's comments?
Well, I agree getting through phase one. I'm not sure we're going to really define phase one as being a victory or not. It sounds like there are folks within the White House that truly believe that we're not giving in, we're giving in too much and we're not digging in enough. But as it relates to tax policy, and we have a deficit that's $4 trillion. And that's something that historically, especially for this type of an administration, and I do mean a fiscally conscious Republican administration, this would have been unheard of. So I think the outlook for getting through this period, it sounds, though, that the Goldman line, I don't mean his line, I mean what we talked about earlier today, is that the economy is, relative to this trade war, starting to get some reacceleration. And if you get that, this service-based economy is in good shape.
Yeah, I brought up the tariffs and whether or not they're undoing the good of the tax cuts because it was an op-ed in Fortune today. Basically, the first year and a half, 2 years of the Trump presidency was very pro-business. And then with every single tariff that has gone into effect, that has basically worn away all that good that was done for businesses.
I actually look at it the opposite. I think he did the tax cuts for the corporations to allow them to prepare for the environment in the trade war. So I think that's the key. And by the way, the reason why we had a run of the market was deregulation and tax cuts.
Yeah.
That's it. So
what's interesting, a view I have is also that the tax cuts basically threw fire on an economy that was starting to reaccelerate and actually brought the Fed in to have to play a bigger role than we wanted the Fed to play, which caused a lot of the Fed missteps.
Hawkish.
And in fact, the Fed, which is certainly the administration has been very critical of, is a function of really what they did. Because I'm not sure we needed the corporate tax cuts to stimulate the economy. Maybe they structurally needed to happen, but at that time, the economy was giving you what you wanted.
I think what's notable, though, the industrial economy, the stocks that have gotten the benefit of the tax cut are just beginning to turn up here. Look at the Parker Hannifins, the Deeres, even the Boeing. So the idea that a
U.S.
tax
Steel
cut,
down 65%.
Right? You had that recession, right? So the idea that this is a one-time thing, I think, is a mistake. There's animal spirits here that have been unleashed, and the industrial stocks are finally starting to reflect that.